everyone, and welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoko, and I'm a certified professional digital trader. Currently, the founder of Senex Digital Link, where you have the opportunity to learn about digital assets, to learn how to trade the digital market, and also how to participate in digital real estate business. So this current meeting is for the market breakdown for the time period of June 12th to June 16th. So I hope that you share this content with your friends and colleagues who are interested in the digital trading market. So starting today, we're starting with DXY, the strength of dollar. For the strength of dollar, we have below here, there is a H4 validation point, which we saw last week, where markets came into this validation point over here and grabbed liquidity below here with these candles and started pushing more up. So currently we have two bias. The first bias is more push up or a little bit of what? Downward push to grab more liquidity below here. For those that did not grab join this move to the upside, to grab more liquidity below here and continue the push to the upside. But we have a bullish structure for DXY, a bullish structure for DXY. Then for you to be very, very aware, we have a lot of technical news for DXY this week. So that's why we're expecting some bullish structure on DXY. But nevertheless, even if we have fundamental news for DXY, it could still stand negative. It could still stand negative for DXY. That's why we have such bias for DXY currently. Then for Euro USD, we have similar view. Over here, where the market is currently, we expect more push to the downside into this point, or we expect the market to move up into this point, go back into this zone, this return to origin. We already have some sales going in over here, but if we're able to see more push to the upside, we're expecting the market to drop more down, because we have this H4 validation point that market needs to come and fulfill its efficiency. And this is a cause. So there's high chances when market comes into this point, it will reverse to the upside and also come back into this H4 validation point. So currently, this is what we see on Euro. More push to the downside or push up, then push down. Then for AUD USD, we have a different structure for AUD USD, quite different structure for AUD USD. For AUD USD, we see market moving to the upside as at last week, but for Euro, it was moving to the downside. From this point, it was moving to the downside for Euro, but for AUD, it was moving to the upside, creating bullish momentum, more bullish push. And see the market move down and then start moving up. So we tracked the validation point where we expect market to reverse, which is above this point. So as the market opens up on AUD, you should be looking for your buy entries. But if you're more of a swing trader and not a scalper, you can then wait for these sell setups for the push to the downside to come back into this H4 validation point and fulfill that efficiency below here, or that cause. It might not get to the efficiency, but it can get to the cause. Then the next is GBP USD. For GBP USD, we have similar structure with AUD USD for GBP USD. On GBP USD, we saw bullish structure as at last week Friday, but for Euro USD, we saw a bearish structure. So from this area now, we're expecting more push to the upside into this cause at this point, where market will fulfill efficiency before more drop. This is now the cause. Market might not get into this validation point, but when it gets to this point, we can start taking profits. But our ultimate target is to fulfill efficiency below this point. Then the next on the list is NZD USD. We have similar structure with AUD and NZD. Currently, we're not really aiming for the cause for NZD. We're aiming for the optimization zone. This is H4 optimization zone. And if you look closely, this is like an M structure. and M structure. So for market structure, market always comes back into what? The neckline. This is the neckline, which is also what? A cause that but market broke that cause and it has not fulfilled the efficiency. So when market comes back into this cause, we should start looking for what? A sell. And this is also a 62% Fibonacci retracement point for the market as well. Then we move on the sell down to this what? Bullish validation point. The next on the list is United States against the Canadian dollar. So for the United States against Canadian dollar, we had negative news impacts for the Canadian dollar last week Friday. For their employment rate, it was what? Highly much, as in it was very, very huge. The unemployment rate in Canada was very, very huge. So that really pushed USD CAD to the upside. And I'm so glad that it is currently inside a cause and it has fulfilled efficiency, giving us a structure for more push to the upside for the United States dollar against the Canadian dollar. So over here you can see we have this one cause that has fulfilled efficiency. This was a touch, first touch, second touch, third touch, fourth touch, now the fifth touch. This is more of a very strong support, and from here we should be looking for our buy setups going up. It could reach to this structure, but the structure could be delayed. Just as you can see this structure over here, it can be delayed before it gets to this one bearish validation point. But this is our overall buy, bias, and targets. Then the next on the list is gold. Okay, no, we don't have gold on the list. We don't have gold on the list. We have US oil. We have US oil. So for US oil, you can see we have an expanding flat. Over here, we have an expanding flat. And with this expanding flat, it moved up. Then this is a corrective structure. And that was moved down. Corrective structure. We're expecting more push to the downside into this point. So over here is the corrective structure. Everything here is the corrective to the upside. Then the next wave, the corrective structure is upside, and then another wave. So I'm expecting this sell to continue for US oil. Although we have an overall bias that this target is meant to reach at least the $60 per barrel target. But let's see how that goes. Then lastly on our list is BTC. Last week, we told you guys that we expect BTC to drop, and currently BTC is dropping. And we said that BTC will drop from the price of $27,200 down to $25,000. So currently BTC at $26,158. It went to $25,500, but we expect it to come down to $25,000. When it gets there, we start looking for our buy setups for what? More push to the upside, heading at least to the $30,000 mark. So that is it for our structures. We'll go to the fundamentals. So starting from Tuesday, we have high impact news on the Australian dollar. So on Tuesday, this is high impact news. This has high chances of moving the Australian dollar to the upside. And that's about 1:30 a.m. in the morning, West African time in Nigeria. So this has high impact news, which has the leverage of pushing Australian dollar to the upside. Also, you can see here the Euro USD, Euro pair, CPI on Tuesday as well by 7 a.m. This has leverage to push Euro to the upside. So we're going to be monitoring this pair, Euro USD on Tuesday. If we see a positive news for Euro USD, this could be our trigger to take Euro to the upside. Over here, we also see GBP USD, GBP news, unemployment rate. If it turns out to be a positive impact news for GBP, we should be expecting more push to the upside for GBP, providing liquidity for GBP as well. Continuous CPI May for Spain on Tuesday as well by 8 a.m. A lot of high impact news, but on Tuesday the most important high impact news is CPI, inflation rate for the dollar. By 1:30 West African time on Tuesday. We also have some core inflation rate that will be announced, but the most important is the CPI, inflation rate of the dollar. Then on Wednesday as well, we have goods trade balance for the GBP in the morning by 7 a.m. London session. But if you can check out, we have FOMC minutes by 7 p.m. in the evening for the United States dollar. We also have Fed interest rates by 7 p.m. as well. So when the interest rate is decided by 7 p.m., it has the leverage of giving USD the strength of pushing more to the upside and also pushing euro to the downside, euro USD to the downside, GPUSD to the downside, and a lot of pairs to the downside. But we have to expect or know where the market structure is at that particular moment to be able to make our decisions. Then on Thursday, we have high impact news on Japanese yen. Okay, I have a sentiment, I have a structure breakdown of GBP JPY, whereby GBP JPY will be selling to the downside. So this high impact news on Thursday has the leverage of pushing GBP JPY to the downside as I expect. So I'll be keeping an eye on GBP JPY as at Thursday. Then also on USD, we have a lot of high impact news, continuous jobless claims. We need this data to be low, but if it is high, then it's going to be weak for the United States dollar. Then on Friday, rounding up the week, we have Bank of Japan interest rate decision in the morning by 4 a.m. Then we have Euro news by that's CPI for Italy, for the Eurozone and Austria by 8, 9, and 10 approximately for the CPI. So all this news has high impact news are pushing the euro to the upside or making euro move down further. So we're going to be paying close attention, tracking this data and using it in our favor. Thank you so much for joining to this end. If you're interested to know more about trading, you can dive down to our website www.tenexdigitallane.com. Get a package for yourself. We have a 1 month package, a 3 months package, a 6 months package, and a 1 year package. We're going to learn how to trade the digital market. We're going to get access to our online platform, get access to our community, and get access to our guidance, one-on-one guidance online when we trade live. So you can be able to take advantage of this information and utilize it to make money for yourself. I hope that this is highly valuable for you. Please smash a like button, comment below which pair you are monitoring and what you expect from this pair. And don't forget to share this content with your friends who are traders and your community as well. Have a profitable week.